So the China's economic model is under a challenge. Their growth has been slowing, but it's been slowing off such a high base after basically 40 years of massive above average growth. And if you look at global GDP, it's growing at about 3% a year. China peaked at 15.2% in 1984, has been averaging probably around 9% from 79 to 2010, and it's still continuing to produce some pretty significant numbers. They're targeting 5% this year. People are skeptical about it. They can get there if they make some changes to improve consumption, but they're not there yet. And I think they're doing a lot of smart things to deal with some of the excesses that is creating the slowdown of growth, which will put them on a better longer-term trajectory. But they're dealing with these challenges right now. Real estate's one of their big challenges. And as you can see, what it did from 2000 to 2020 was it grew basically to 25% of the China's GDP. And then they hit the problems of the pandemic and other challenges, economic challenges, and the property developers' challenges are well known. Floor space sold and floor space started to come down. What's missing in the discussion is that 7.8 million square foot of space was completed last year alone, and they're continuing to knock out the partially completed inventory so that they get them in the hands of the people that made the investments a while ago, and they have real investment as opposed to it. Property values will come down because of the excess inventories. It's likely.
I'm not sure you're sharing your screen.
Really? Okay.
Hey, you want to start again? Take three.
This is shown sharing now.
Can you see the screen, everyone here?
No.
No.
You guys put it up then. I don't know why mine's not connected.
Yeah, I'm sure. 1 second.
There was some really good slides too. I can't do the
We
third time.
saw them on the first take before you started recording it. We saw the slides.
So question for you, because you brought up 300% debt to GDP while your technical crew was working on everything. Who owns that debt? Who's the holder?
A lot of that's domestic.
So it's domestic individuals and institutions that are holding the debt of okay.
But there is, as we know from the Evergrande and others, there's a lot of foreign bond funds that own a lot of it. And I think they're going to have some challenges.
Does the central government own any of that debt? Are they able to do like a jubilee or something like that?
I think China will end up doing a jubilee of some sort.
All right.
The question is how and when.
What they own is very, very little.
They own their, okay.
It's a lot of it's owned by the local government.
Local government's huge.
Right.
So what they're going to do, and they'll roll it up into the banks. So they'll probably do, what we used to do here, the good bank, bad bank, and give all the people you don't like the bad debt.
Or the Alexander Hamilton, make it all.
Well, they just lowered
Sovereign.
bank reserve requirements, I think, for the third time in like a year.
Oh, did they?
Yeah, they're doing what they can to stimulate the economy. So the demographic cliff, I'm sorry, you're on the debt page.
Back up.
I can't
do anything right.
I don't think we should post this one. Let's start with that. The demographic challenge is well known, but as I was mentioning, they brought hundreds of millions of people out of poverty. They have a middle class that is why companies have a dilemma of getting back into China right now, or how you deal with China, because that middle class is one you can't ignore. And their per capita incomes have gone up considerably too. So for all the challenges, they do have a lot of opportunities, and this demographic one is not going to be solved anytime soon. If you go to the next slide, Mark. I think we're going one more. Let's go to this one. So I think this is one of the areas that is really challenging companies, which is how do you deal with the changing terms of trade, whether it's the anti-dumping issue, which is part of what Yellen's over talking to them about, the tariff imports, which is what Trump's talking about, raising tariffs even higher on China. China's trying to figure out a way to find a way to get around them or avoid them or ease the pressures on that. But this is a real dilemma for CEOs around the world and for CEOs in China for how do you move forward if you're dealing with a world where you have external forces, governments who are very aggressively trying to restrict what you can do. And it's not just the US. The EU has been as aggressive as anybody on trying to protect their countries from dumping, from anti-fair trade practices, or just by global champions putting their companies at risk. So I think that changing terms of trade is a real issue. And if you go to the next slide, Mark, it's actually coming through in how capital is flowing. And China's experienced, after a long run of capital inflows, they're now experiencing a pretty prolonged period of capital outflows, which is changing how China's thinking about the world in some of the things they're doing as well. So what are the protections they can put in place when you're seeing massive trade changes going on? One of the things they're doing is increasing their gold reserves. So they're preparing for future geopolitical issues. They're preparing for future sanctions, and they're preparing to kind of weatherproof their country against foreign adversaries taking action against them. And when you think about what we have coming with the election here, the one thing that the two parties can agree on is being negative on China is a winning sell right now. So they're going to continue down that path. China needs to reverse the capital flows, and that's part of the charm offensive that she's trying to put on with the U.S. companies to bring them back. I think it's a real dilemma for the U.S. companies to figure out, do they come back in or not, and how do they do it, and which areas do you go in? And if I'm a U.S. company right now, I'm thinking along the lines of, what are China's defined strategically vital industries? And I know I can't compete effectively in there unless I am the exclusive provider like an ASML to them. That's the only place you can go and get it. Otherwise, you're going to come in second every time. And you really want to go in the areas that the Chinese government has not defined as strategically vital. So a lot of the consumer, discretionary items, things like that, consumer staples, are not really what China's government's worried about. It's moving up the value chain and the production chain that is going to drive what they want to do going forward. Next slide. Inflation's not a problem in China. They are actually in a deflation period. And reversing that is key. So one of the challenges that they're facing is the US is going one way and China's going the other in terms of rates. So as Andrew just mentioned, China's cut rates several times this year. The US is raising them. That's making the currencies go in different directions as well. So really right now we're importing deflation to the rest of the world from China. I think China needs to reverse that by getting their consumption back. They need to really make this transition a little bit more aggressive, but I don't think they can do that. I don't think they have the time to do that. So I expect they'll pull out some of the old playbook and bring in some of the investment infrastructure spending again to stimulate enough growth to ease some of the pressures on the system. Next slide, please, Mark. Confidence is a challenge, and what happens with confidence is as consumers pull back, then companies start to slow down their hiring, their spending, and you get into this negative loop, which is part of the deflationary spiral that they're worried about there. Yet last year, consumption was higher than income growth, which means that they're not saving right now. They are continuing to consume at a level that's beyond. So the idea that the perception that the negative confidence is slowing spending is not matched to the numbers.
There was an article in The Atlantic about that happening exactly here in the United States, that people have disconnected or taken apart what is going on between what they do and what they say.
Yeah. And that you're seeing that also in all the polls around the election as well. So next slide, please. But this is really the challenge for China is their investment model has been, their economic model has been very investment heavy. And just to put it in perspective to the US and the UK and the OECD, you get a sense here just how distorted it actually is on a relative basis. This ends in 22. With what we've done in the US, our investment spend has gone up a couple percent. And theirs is probably coming in a little bit. So that is getting a little bit more aligned. Europe is doing more of the same as well. But really the issue for China is how do they get their consumption to be, their economy to be more balanced and get consumption up. So if we go to the next slide. At the same time, they got to deal with the geopolitical issues, which are shifting where exports are going. And how do they deal with losing two of their best customers or seeing declining share in two of their best customers, the US and the EU? And how do they transition to the like-minded nations who are not as affluent right now and not as big consumers, but are big future consumers because of demographics? How do they balance this off? And I think one of the challenges that is a problem for me doing these presentations weekly versus the way the world thinks about China and the way China thinks about China is doing weekly calls is the complete opposite of the mindset of the way China works. They have a much longer term view of the world. So we get caught up in quarterly reports and things like that. And they're thinking about decades. And I think they're playing the long game here. So a lot of the stuff we don't understand or don't think about or think they're doing wrong, it's just a mindset difference and cultural differences that we forget because we're so caught up in the short term. Next slide, please. But then we forget all the strengths that China has. And this is just, one area, what they're doing in EVs. And again, part of the reason why Janet Yellen was over there and concerned about dumping. And when you look at the numbers, and we all know these things, but to see them on a graph like this and China's dominance in EV sales, and what do they do if they're not consuming them there or they have enough of them there? How do they avoid dumping them onto the market? And what does that mean for us? If you go to the next slide, you can see where they are in the battery supply chain and their dominance there. And it's just in charts, it's staggering to see the numbers where they are. And go, Mark, to the next slide. And you can see it's all the selected materials and minerals and fossil fuels and their dominance there. It's really kind of crazy when you see the purple is China, the blue is the US, and nobody else really matters. And the US doesn't even matter that much. If it wasn't for fossil fuels, where would we be? So this is really, what the concerns are for the world and also for China. It's so imbalanced that it's going to create problems that have to be dealt with, which gets to the next slide, Mark, which is really a question of you can't really decouple when you see the numbers that we've just seen. We're too interconnected and too interdependent. If we do, the costs will be staggeringly high on the global system. It would be hugely inflationary. So de-risking is going to be the theme. We have to figure out what that means. CEOs are trying to figure it out. But it's not just with China. It's if you're in Europe, you're trying to figure out where do you fit in the global system now? Where are you going to put your manufacturing? Taiwan Semi is setting up duplicate facilities now for fear of oncoming conflict and invasion of Taiwan. So you really have to think very differently about it. So I think we're going to have this period where you're going to have some elevated cost around the global system because of these redundancies. You're going to have a lot of fits and starts for companies where they're making decisions where do they not go into China and miss a big opportunity? Do they go back in and get screwed and get nationalized, things like that? Those are the worries. So really challenging decisions for people, but it's not just there. I don't know if you saw, but Shell is looking at moving their listing from London to the US. They think two things could happen with that. One is more access to a bigger capital market system, but also a revaluation because of the low values putting on the London exchange versus the US exchange.
Could it be ESG related as well?
There's all those issues as well that are coming into the force. So there's a.
We're gonna talk about that, Mo, right? Your choice of exchanges for the IPO market.
Yes, absolutely. God bless America on that one.
So
We have judge shopping too.
So a lot of changes there. So Mark, I would just leave you with, I think this is a world where you want to be very focused on where you're going. I think that popularity eliminates undervaluation, leads to overvaluation. I think the lack of popularity of China right now, whether it's a quarter or two or three early, I think this is where the big money is going to be made because it's too big an economy with too many good things going for it. And there are pockets of opportunity everywhere. I think if you read their strategic plans that the government puts out every 5 years, it will tell you and will tell CEOs where you can fit or can you fit in their system and how. And it'll give everyone a roadmap to the strategically vital industries that the government's going to get behind. And they're really the ones that they care less about. And from that roadmap, you can make good decisions to invest there. I would say also you can benefit from what's going on in China by not investing there as well. And we do that through our exposure in the materials area, whether it's the rare earths, whether it's steel, whether it's copper. All those are going to be big beneficiaries of what's going on right now with EVs, with everything that's going on in the world. But I would say find the pockets of opportunity in all the different areas, but be very selective when you're going into them. And I think you'll see similar opportunities in the public and private markets. And it's really a question of liquidity needs and time to return that I think is going to matter in a 4 or 5% interest rate environment instead of a 0 interest rate environment like we've been in. So I'll stop there. Mark.
So questions, comments?
Or tell me I'm wrong.
I guess a question, Stephen. My experience is you're totally right about the non-strategic businesses being the place to go. But a perfect example would be years ago, I was in the same hotel with the team from Procter & Gamble, and they told me how much money they made in China. It blew my mind relative to the US. What appears to be different, and you tell me what you think, is that even those companies, because of currency controls and the balance of trade, as you pointed out, flipping, that getting your money back out, even for people like that, maybe is not like it used to be.
Actually, one of the companies was, I think, looking at splitting off their China operations again so that you would create the valuation of the China operation valued at the right level and the other. So when you lose that asset, you know what you're losing up front. It's kind of the way to think about it, right? It's preparing for, what could happen to what's happening to companies in Russia right now that are Western companies. So I think CEOs are going to be thinking about the Russian experience and saying, if I'm going into China now, do I have to prepare for that? And how do I think about the value of my assets? And how do I think about partnerships and the like?
A couple more questions. Adam, can you be quick on your question, please?
Yes, good morning. 2 questions I have.
Yeah, one.
Stephen, if you can go back to the export slide, China export slide, you had an increase there to BRICS. Do you have any idea what that is?
What they're exporting to the BRICS?
Yeah.
I think they're running most of the same stuff through that they would have been sending to us directly. It's really the same goods that they're the manufacturing engine of the world. They're producing same stuff, I believe, for the BRICS that they would be sending to us for the most part. I don't know the exact.
I'm
Right.
sorry, we have to move with limited Q&A.
Okay,
Bill?
very well. Very well. Thank you. Thank
Bill?
you, Stephen.
Yeah, super quick. Really good, Stephen. I think this frames things very nicely. My one comment is that the good news about the Chinese economy is that it's a command economy, and the bad news about the Chinese economy is that it's a command economy. And I think that, everything said notwithstanding, so much is going to depend on how they move forward with regard to how loose they're going to be willing to play with the internal economy. I mean, things changed so dramatically during and post COVID that, from my perspective, it's almost night and day, and it's going to be very interesting to see how this works out. If it goes back to the way it was, it's going to be unbelievable. If it remains, it's going to be super tough.
Yeah, I think it's a fascinating challenge to figure out if you're a CEO how you want to play it. So I agree with you, Bill. And the changes the last couple of years have been so dramatic that I think everyone needs a new playbook for there, and you need to really think through the long game as opposed to the short. I would just add one thing from a conversation we had over the last couple of weeks. I saw that gold prices are up again, closing in on $4,000, $2,400. China's central bank, 15 months in a row, is a net buyer. So that is a big push for it, and it speaks to their concerns about sanctions, their concerns about if they attack Taiwan, other things. But that is a big. When they buy big. That does move the price considerably. The caution thing is when they stop buying or when they reverse. the stock price drops, the price of gold drops considerably too. So just keep that in mind. But I think you'll see the whole commodity complex has moved up a lot this year. And I think a lot of that is that China is improving and you're starting to see that work through the global system. And the overall resilience of the global economy has driven it as well.
Any last question before we switch over to this allocated session?
I was just in China in December. I was invited by the Hainan government, and they're making that area completely duty free. You can get a bank account, bring your money in, bring your money out. You don't need a visa. And I'm actually going back in the next few weeks for a project that they wanted me to participate in. But I think they're working on making that an easy way in and out for businesses. They want me to bring a lot of business from Latin America over there to avoid all these doubts that people have about coming in and out of China. Supposedly that area.
We'll see how that plays out, Dave. I'm skeptical.
It's actually interesting though, they're trying to replace, I mean, think about it, they're trying to replace the lost market share of the US and Europe and prepare for the future where they don't have relationships with them in case they don't have relationships.
It's 11:30 and obviously we thank you, Defender. For those,
Hey, no charge
for
today.
for those seeing the recording, if you are, you'll notice we actually did not start at 11 o'clock. Thank you, Stephen, as always.